Is up, guys? We have got so much to talk about today. We are talking about obviously the market. Today is June 15th, 2026. As always, when you guys are watching our Monday market update, make sure you guys are opening the market update slide deck in our housing wire, which is going to be attached here in our description. So, first thing we're going to talk about is the Fed's Balancing Act. Huge week as we start heading into the first Fed meeting with the new Fed chair, right? We got several things they took a look at, right? We have inflation. Consumer prices continue to remain elevated. We know, supposedly, as of today, that the Strait of Hormuz is open. We know that the war has officially ended, so that's a good thing. Existing home sales, we know that they have hit their strongest pace of 2026. And then jobless claims, right? We know obviously on the jobless claims, surface data is moderate, but we know that the labor market weakness is continuing to build. And a big proponent of that is obviously artificial intelligence. Now, if we take a look at the next part, such a cool slide, right? The macro dilemma, opposing forces trap Fed policy. On the left side, we see rising prices. Of course, headline on inflation. We know that is because of what is happening since March with geopolitical stuff that is pushing the Fed to keep interest rates high. On the other side, we know expanding, continuing jobless claims and hidden labor market costs, right? It is pulling the Fed towards rate cuts. So you could kind of see a little bit of that seesaw, right? Between rising pressures, right? Elevated inflation, spiking global energy costs. And then we see on the other side that holding pattern, right? The Fed has held interest rates, right, so far and has decided to not hike or cut. On the inflation side, again, headline CPI 4.2%, holy moly, right? Jumped up 0.5% month over month. We obviously know that is hot, mainly because of the stuff happening overseas. Now, let's take a look at this stuff because this is the thing that I believe should be really monitored. Core CPI, right? We are excluding food and energy at 2.9%, just a slight, very moderate uptick of 0.2%. And then we also know on the wholesale side with PPI, right? Again, when we take a look at just that headline, 6.5% and the core 4.9%. You guys can see such a great picture here on the labor market iceberg, right? Above the surface, 229,000 new unemployment claims, but below that surface, 1.795. We're still having almost 1.8 million people continue to put claims for unemployment. Obviously, new unemployment claims continues to be modest, but we're obviously seeing a lot of people start to look to freelance, contract work, or gig work, right? Policy crossroads, again, this is what I think this week is going to be critical. That federal funds rate has held steady throughout this entire year, right? We saw 3 rate cuts last year. Big part's going to be about, are we controlling inflation to restrict it? Are we going to potentially hike rates in order to get people to stop spending money? And then, of course, supporting jobs. If we make things more expensive, is that going to impact more people and potentially turn us into a little bit of an upside down of what we saw post-COVID, right? That new era, right? We know investors are laser focused, guys, on this Wednesday's Fed meeting. Again, big debut for Fed Chair Kevin Warsh, right? So taking a look at some of that other stuff, right? On the housing market side, 4.17 million home sales pace, up 3.2% month over month, right? It's the strongest pace in home sales since December. We're looking at median price up 2.8%, inventory up 1.55 million, velocity 29 days on the market down from 32. Clearly showing the market is still red hot. 25% of homes sold above list, 35% share of first-time home buyers. We never hear the media talking about this stuff, right? Now, some of the housing dynamics, again, improving affordability. Mortgage interest rates remain the lowest that they've been in about a year. They just took a dip today. Was a very good day for rates. Growing inventory, 3.3% month over month increase in available homes. And then, of course, we know that there's obviously a huge uptick of active buyers now heading into the market. We saw home builder confidence today. Tomorrow, the Fed meeting will start. Key day Wednesday, right? The Fed announcement and the press conference. Fed Chair Warsh's debut. How will pending home sale data and latest retail sales, and then just as always, the consistent weekly. Okay. So again, as we start heading into these things, is this going to potentially be that break of what we need to look at when we take a look at the market? Are they going to potentially change their narrative, and can we possibly see a little bit of that shift of what we've been looking for? As always, if you guys have any questions, make sure you guys visit my website, gotmortgages.com, and let's make it a great day.